down about 12%. Joining us right now is Slack CEO Stuart Butterfield. First interview after now being an official publicly traded company, your first quarter out. What are investors getting or not getting about what's happened here?
Well, I mean, investors are going to make decisions over the long run. This is a very strong quarter. But whether it's up or down, yesterday up 8%, the regular market down after, it's not going to make a whole bunch of difference to the long-term holders or to the business. This was strong quarter, 145 million revenue versus 92 million the year prior, and we're happy with that.
Let me ask you a question about this. This is MKM Partners, the analyst there wrote a note, said, as a private company, you can grow at all costs. As a public company, you have to grow at reasonable costs.
Yes.
How do you define reasonable costs?
Well, we're in a strong cash position. It's close to $800 million in the balance sheet, and full year we're looking at minus 100 to minus 110 million in free cash flow. So that seems prudent and responsible. One of the reasons we did the direct listing in the first place is because the strong cash position. So when we see opportunities, growth is the priority. I don't mean growth at all costs, but
in terms of the priority of monetizing certain customers, I think that's another issue that analysts and investors have been looking at, which is a lot of small businesses get your service effectively for free. It's really the larger enterprises that are the ones that pay. How much focus are you planning to put on trying to monetize the smaller folks?
That might be a little bit of a misperception because there's 100,000 customers. And there's 500 companies in the Fortune 500. So we're talking 99,500 who couldn't possibly be there. There's a lot of small businesses there. So I think what people get hung up on is we talk about 600,000 organizations using Slack and 100,000 paid customers. But among those paid customers are organizations that have hundreds of thousands of people, tens of thousands of people. And among the people using it for free are people working on home renovation projects or planning weddings or organizing their kids' soccer league who we don't expect to pay, but who are great spread for us. And that's how Slack gets introduced into new companies, and people become familiar with it.
Hey, Stuart, it's fun being a public company, right?
Yeah,
watching,
it was exciting.
Kind of watching what happens.
Look, I'm on TV. Hi, Mom.
But to be watching swings like this, when my guess is you guys were being pretty upfront and honest as you could be when you were talking about the guidance you were expecting that you gave when you first, before you went public. You miss it just slightly, and the street's like, wow, what happened?
Well, we beat our guidance, we beat the consensus estimate, and we raised for the year. So I think there are nested expectations that go up.
And that's the crazy thing about Wall Street, right? Trying to figure out how to help analysts get some of this guidance. I think it's a crazy game. A lot of companies just get into this habit of kind of spoon-feeding the analysts and telling them these things so they don't wind up with big swings like this. But what's it like trying to absorb all this for the first time as a public company and realize there are crazy swings based on very small revenue or earnings shifts that you get punished so greatly when you're doing your best to just kind of be upfront and honest about where you see things.
Yeah, it's an interesting debate that we even had before. Like how much, where do we want to guide to? How close is that to what we really think is going to happen? When you're growing at the rate that we are, adjusted for some of the one-time stuff, 66% year on year. That's a hard thing to model. There's a lot, like one big deal can make a big difference for us. One postponement of something can make a big difference. So we try to be, as you said, as upfront as possible and not get into a dynamic where people have an expectation that whatever we say is really going to be 8% or 10% higher. We're constantly beating and raising.
Speak to the concern, to the extent there is one, about the competition with the Teams service that Microsoft has, and in terms of the number of people supposedly using Teams versus Slack.
I would be happy to. So when we look at this quarter, one of the things that was really exciting for us was just like win after win in enterprise. And when you get into large enterprise customers, almost all of them, I don't know the exact number, are Office 365 customers. So almost all of them have Teams available for free. And a couple years ago, they chose Slack when they had Teams. Last year, they chose Slack and expanded. This year, they chose Slack. Many of them going wall to wall. So whether it's free or not isn't really so much the issue as whether it provides value to people. And in addition to that, one of the things we're excited about is shared channels, which is a feature that we've had in beta for a while. 20,000 of our 100,000 paid customers, so 20,000 companies opted into this beta, started to use shared channels. And that could be consultants or contractors collaborating with the customer, or it can be companies providing service or customer success over shared channels. the density of that network has increased, the intensity of usage has increased, and later this quarter, we're going to make that available to the general public.
So, Stuart, we had an analyst this morning who said his big sticking point is he wants to make sure that this is not just niche, that it's not just tech, that it's really something that's bleeding over. How would you respond to a concern that an analyst raised today about that?
I think you can just look at the customers. And one of my big challenges as the CEO is remembering which customers we're allowed to talk about and which we're not. So I know, I'm sure the producers have some logos they can flash. But we're in financial services, we're in healthcare, we're in retail, we're in government expansion in the federal agencies. This last quarter, some huge wins in Europe and even more in Japan. So like NTT, NEC, those are giant organizations and there's huge adoption. So I'm going back to Tokyo a week and a half from now, my 4th trip this year. It's a part of the business that has outperformed. And I think what's interesting there is there's this big push from the federal government in Japan for what they call workplace reforms or work style reforms. And part of that is aging demographic, best blue-collar productivity in the G7 and worst white-collar productivity. So there's a lot of reforms that they want to make that increase organizational performance, and Slack just slides right in there because it's one of the few tools, I think, that leaders of the organizations and end users, the employees, can rely on to increase the degree of alignment, to increase the degree of agility of the organization, and increase performance overall.
Any lesson in the last quarter, given the service disruption, in terms of as you build, the scale issue, what that ultimately looks like? I'm starting to think as you become more of an international company, what you have to do there.
Yeah, so what you're talking about is the service credits that affected our top line numbers. The lesson was when we were 6 months out in market, young company with very few customers, I said, hey, we'll give people 100 times their money back, which is not the industry standard for those kind of service level agreements. I also said the standard is 3 nines and 99.9%, and we'll do 4 nines, 99.99%. The customer centricity in that is something that we absolutely want to retain. Some of the contractual terms that have that outsized effect are maybe not a good idea as a public company or even as a private company. But the thing I want to make clear is if we had Microsoft or Salesforce or Workday or ServiceNow's SLA, we wouldn't have paid out anything because we cleared 99.9%. We just didn't hold ourselves to that 99.99%. Right. And I think we had more uptime than many competitive services over the same period.
Final question, path to profitability. It's the question that's always on the mind of everybody. What do you think?
Yeah, I think the priority for us is free cash flow break even. So if we can put $1 in the bank at the end of every month, but we're investing in growth, that would be the kind of ideal scenario because we're single-digit percentage penetrated into a market of hundreds of millions of people, and we're just scratching the surface today.
Okay, Stuart Butterfield, thank you for being here. Appreciate it. Come on back. We'll make this a quarterly thing.
All right.
Appreciate it.
When we return, some breaking jobs data. ADP's private payroll report for August is out in just minutes. That comes ahead of tomorrow's closely watched government jobs report. We'll have the number of the morning and the instant analysis when Squawk Box returns.
Squawk CEO Call is sponsored by SunTrust Bank.
I can find and fund my car, from a Mini to a Jaguar.
Feel-good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. ABSA and ATOL protected, subject to availability and conditions.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Nason and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Welcome back to Squawk Box. The futures are strong again today. I think there'll be 3 straight days, right? What's today?
Yes, it would be. No.
Wednesday?
Tuesday we were down sharply. Yesterday we made up for most of it.
Oh, that's right. That's right.
Today, this morning, you're looking.
Last week we were strong after the previous week when we were down 600. Yeah, right. It's like who's our guest host? And then
today.
Who was it today?
Eric.
Oh, that's right. I knew that. All right, let's. They're 85 on the Nasdaq, the S&P up 20. He was sitting where Leisman is.
Yeah.
Right? Okay. Yeah, I knew that. All right. Let's look at Treasuries quickly. Treasuries, as you can see, indicated right now are trading 30-year at 2%. Greenspan says the 30-year is what he watches now. Remember, he said the 10-year before. Right. He was on yesterday. God, he was with it and sharp for his. I mean, he's just the same guy. It's amazing. All right, let's Becky.
Right now, it's time for ADP. Steve Leisman's here.
195,000 ADP, the private sector payroll company that tries to estimate what the BLS will tell us are the jobs numbers tomorrow for the private sector, estimating 195,000. And that's against a forecast of 140. And if you look to the bottom of the screen, which is up on your television right now, it's 150 is the payroll estimate for the BLS for tomorrow for government and private sector. This suggests, if people were, all things being equal, they might upgrade some of their estimates for tomorrow. Payroll July was revised down 14,142. The goods sector doing quite well, 11,000. I was very interested in the manufacturing number inside that, which was up 8,000 because we had that contraction in the manufacturing ISM. Services always does well here in the United States, but are very strong this time around, 184. Where were the jobs? Let's take a look by industry size. Pretty good distribution with medium-sized businesses, 50 to 500 or 499, up 77,000. So thank you middle-sized or small, medium-sized business owners for hiring that many people, but small and large also did a lot. Now I want to look at by industry. Education and health up 58,000. We have Mark Zandi here. I'll ask him in a second as to whether or not there was some seasonal aspect of maybe teachers getting picked up a little early returning to work. Trade transport doing well, 39,000. There's the manufacturing, and there's the construction at 8,000. Becky, we have an issue.
Yes.
We have to discuss. It's a little on the nerdy, wonky side, but as we've reported, the BLS has downgraded its estimate of the level of employment by 500,000 jobs through the year ending in March 2019. These will be put out in the individual months in January when they put the benchmarks back into the BLS numbers. But what that means is the run rate of the economy in terms of jobs was 41,000 less by month in that period.
Why did they figure this out now?
It's a great question, and I'll tell you why, and that will lead to my biggest complaint of all in the history of covering this data. They get to true it up with the actual state unemployment claim data about once a year, which means the data is out there. If they could get the computers in the states to communicate with the federal government, we could have more accurate jobs numbers. But as it is now, they all can't communicate together to the federal government. So we have to wait every year for the benchmark revisions. I'm off my high horse.
500,000, how much does that compare to what we've seen in years past?
It is a larger revision than we've had in the past. It's a 0.3% revision, and the prior years they brought it down quite a bit, which means their estimates have been better, to 0.1. An asterisk you might put on this discussion is that sometimes at turning points is when they get these larger revisions in the economy. So it could suggest a slowing. It could just as easily suggest we're running out of workers. The Beige Book yesterday, full of this complaint that we can't find workers. We have all kinds of problems doing that. The thing is that Wall Street's estimate of what a good number is needs to come down. So this 195 in ADP, if it follows along tomorrow, is actually a better, stronger number given what might be the new run rate than it otherwise would have been. Right? And now we got a guy who really knows this stuff.
Mark Zandia is here.
That's just right.
Mark
Did I get that
Zandia
right?
is the chief economist at Moody's.
Yeah.
And that's what you think it is? It's either a slowdown or we just can't find the bodies for it and we've got to lower our expectations of what a great number is?
Both. I do think the underlying rate of job growth, abstracting from the vagaries of the data, the revisions being one of them, just one of them, is probably half the ADP number. It's probably closer to 100K. So we're producing about 100K per month if you consider all the vagaries of the data, which is consistent with 2% GDP growth. It's consistent with unemployment that hasn't changed appreciably in a year, stable unemployment. And this highlights why the economy is at risk, because if job growth slows any further, that means unemployment will start to rise, and that will be the fodder for recession.
It's a weird world where I had a lot of talk with the National Association for Manufacturers, and they have a smart chief economist over there, Chad Muche, and I said, why is manufacturing slowing? And he gave me 4 reasons. He said global uncertainty. He said the trade war. He said worker limitations.
Yeah.
So it's a weird world where you have a kind of slowing economic activity, but you also can't find people.
Yeah.
And so, I don't quite know what to do with that, because usually you can't find people because business is so good.
Yeah, well, that goes to the record number, the previous record number of open job positions. It goes to why, abstracting from this month's the gain in small businesses, in the previous 3 months, it actually declined in each month.
Right.
And that likely goes to the inability of small companies to fill the open positions.
They're in the worst position, right?
Because they're competing against big guys
compete
like
against
Moody's, and they can't compete.
So let's cut to the chase. How's the economy? Are we going to recession? Is everything going to be all right?
I think it depends on the president. I think if the president pursues the trade war, if he follows through on all of the threatened tariffs, the likelihood of recession next year is greater than even. I think we're right on the cusp.
Greater than 50% chance for next year?
If he follows through, yeah. I think manufacturing is in recession. The ag sector is in recession. Transportation distribution are in recession. They're on the front lines of the trade war, so they're feeling the effects first. The next to go is the rest of the economy, and that goes back to the job market. If underlying job growth slows any further, unemployment rises, that undermines consumer confidence, spending, and we get into a vicious cycle called a recession. And we're right on the cusp of that. So he's got to end this thing toot sweet pretty quickly. Otherwise, we will be in recession.
All right. Mark, thank you for being here.
Sure.
Just back to the ADP numbers, the 195, the biggest strength is that's reflecting is what?
That number is there was job gains pretty much across the board. So we saw, particularly in education, healthcare. I don't think it's seasonal. We correct for the seasonality.
Okay, because there was a 13,000 pop in the education thing. I didn't know if you were counting teachers coming back early. Sometimes that happens.
That's always squirrely that month, because maybe the season won't pick it up. Here's the other thing about August. This is something you should consider for tomorrow's number. The response rate from companies to the BLS survey is very low in August, particularly big companies, because people are on vacation. Yeah. And that means that you'll generally get a low number on the month.
Mark, thank you. Good to see you, Steve. We'll see you soon.
Coming up when we return, a Squawk Newsmaker interview. One of the candidates driving the conversation around the 2020 race for president, billionaire businessman Tom Steyer, is going to join us. Ahead to talk about trade, taxes, running against the Trump economy, and so much more. You don't want to miss the conversation. Stay tuned. You're watching Squawk Box on CNBC.
Fun fact. At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get 5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees and carrier charges apply.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA net or protected, subject to availability and conditions.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Welcome back to Squawk Boxes. We're going to take a quick look at futures at this hour. We are about an hour before the market's going to open, and if we did it right now, the Dow would open up about 260 points higher. NASDAQ looking to open about 93 points higher, and the S&P 500 up about 27 points.
We're a little more than an hour away from the opening bell on Wall Street. Dominic Chu joins us now to look at some of the morning biggest market movers. I was wondering when we would do this, Dom.
Top of the morning to you, Chu, Joe. We do it. We try to do it every morning for you, just to kind of get you. I know, and hopefully you appreciate
know what
it.
Time. Well, you know I do, of course. Don't always pretend I do like it a lot, Dom. I do.
All right. Well, Joe, let's see if you like these ones. We got 3 of them for you. We're going to start with shares of GE, General Electric, which are up about maybe 1.5% or so, and just around 230,000 shares pre-market volume. The industrial conglomerate has been started with coverage by analysts over at Morgan Stanley with an equal weight or a neutral rating, along with a $10 price target. They cited a reasonable risk reward at current levels. They balance those risks in the long-term care business with optimism about the aviation and a turnaround in the power business. So we'll watch those shares. Also, there are shares of Lyft, which are kind of getting a little bit of an upside move, 3.5% at this point here. They hit a post-IPO low yesterday before bouncing into positive territory, up another 3.5% today. 68,000 shares pre-market volume, thanks in part to coverage initiation by Deutsche Bank analysts with a buy rating and a $70 price target. They think the stock is bottoming out and say, among other things, that regulatory fears are overblown there as well. And we'll end on shares of Comcast, which are higher by just around 2% or so pre-market, roughly around 11,000 shares there. The cable and broadband internet giant and parent company, of course, NBC, Universal, and CNBC, is getting upgraded by Oppenheimer to an outperform rating with a $54 price target. They like, among other things, strengthen that broadband business, which offsets some weakness in video. They also think positive catalysts are coming in 2020 from Olympics coverage and election coverage. Worth noting that as those shares did hit a record high, Becky, in trading yesterday, so getting another boost today.
Dom?
Helps my retirement anyway.
Yeah, exactly. Yours and my both. Don, thank you. When we come back, the second round of breaking economic data, the latest reads on jobless claims, productivity, and more, all up right after a quick break. By the way, check out the futures. This morning, things look to be roaring back once again. Up about 270 points for the Dow futures right now. S&P up by 28, the NASDAQ up by 95.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Carry on, choose findandfundmycar.com.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA and ATOL protected, subject to availability and conditions.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Nason and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Strings and things. Strings and things. Strings and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Welcome back to Squawk Box. Rick Santelli here with some breaking news. Our second quarter final read on productivity, the silver bullet for a capitalist, market-driven economy, and it is up 2.3%, which matches our last look. So all the previous numbers dissolve into this final Q2 number, and it's a very solid number. One thing that did change a bit, unit labor costs have moved up from 2.4 to 2.6. Now let's get to this week's initial jobless claims, 217,000. That's up 1,000 from a slightly revised 215 release last week, ended up at 216, add 1,000, you arrive at 217,000. Continuing claims a week in the rearview mirror, 1.662 million, and that indeed is a bit light. It lowered a bit from 1.701 last week. Kind of a wash, lateral, but down the smidge. Maybe the big news is nothing positive about negative rates finally seems to be getting some traction in the world. Whether it was Christine Lagarde or just the markets in general. We have a boon now that's getting much closer to minus 60 than it is minus 75. We see the shots, the 2-year there, yield moving from minus 90s into the mid to low minus 80s. Now, this might not sound like a lot, but really it's kind of huge. As a matter of fact, there's whispers all over the globe that maybe Mario Draghi, as he kind of rides into the sunset, is going to be less aggressive at September 12th meeting. We'll have to wait and see. But, we could never talk about how there's very few positive about negative rates enough. Certainly seems though the word's getting out. Joe, back to you.
Certainly does, Rick. Stick around. Joining us now for more, CNBC senior markets commentator Mike Santoli and senior economics reporter Steve Leisman is here as well. Steve, it says here you need to go first. Is that okay? You need more time?
I don't need more time. Thank you. Real quick, Jobless claims up a little bit, 217. Still a good sign in the jobs market. You know, it was like, used to be 300 was the number we got concerned about. I think that number fell to 250, so we're still well below that. We're still on track. The jobless claims number would tell us that the job market's healthy. The productivity number is a little weird. There's declines in several sectors of productivity. Manufacturing productivity is down. Non-durable and durables both down, but the total business is what's up. So we just want to be a little careful to watch that productivity number. It's a good number. It's a solid number. It goes along with a pretty decent growth, but we're going to want to watch to see if manufacturing productivity can rebound again. And that's all I got, Joe.
That's all you got. All right, that leaves it. You're going to have to do the heavy lifting then, Santoli. What do you got?
Well, I mean, I think it just confirms the baseline view. U.S. economy seems to be plugging along. It hasn't really missed much of a step. Now, the bond market's been relaxing already. The stock market was going to have this sort of almost 1% pop on the overnight news with renewed plans for China talk. So this all makes sense to me, you know, that we went down from S&P 3,000 on the new tariff move and the kind of worsening of relations there. Now we're already bouncing a little bit at the top end of the range. So now we have an excuse to test above it. And I do think that, hey, guess what? We re-steepened the 210 Treasury curve, the thing everyone was sort of over-concerned with last week. So we'll see if real buyers come in and it's not just kind of a mechanical pop. Like I said, just under 1% looking right now.
Joe, can I just ask Rick a question? Because he said some interesting stuff, I thought.
Please.
Hey, Rick, you said two things. First of all, this idea that Draghi's not going to deliver what the market expects next week. I don't know how much, what's the word I'm looking for, disappointment from the ECB is built into the market. And the other thing, picking up on what Mike was saying, does the bond market have to test this rally that it's had? I mean, this is a fast and furious rally, to coin a term, right? And does it have to go check out the downside here now, Rick?
Generational rally. Yeah, generational rally.
Yeah.
You know, we're getting in between two really huge aspects, and to me, it's really exciting. 209 is a really huge area for 30-year bonds. When it traded through there, it was lights out. Okay, 136, 137 is the massive double bottom, all-time low ever in 10-year note yields. If we get above 209 before we violate 136, I think the all-clear sign can be shown. As a matter of fact, I think I'd be a little nervous if I was too long looking for lower rates because snapbacks could be painful. So very interesting setup. And as for looking for less out of the ECB, it's all around us. Now, it's not huge yet, but you could see it simmering. You could see, you know, tens to twos. I don't think the inversion means much, but the fact that it isn't, the fact that actually Europe's rates started to bubble higher before ours yesterday, this is all very significant.
So, Rick, I mean, it looks like, I wonder if we got to think about a central bank disappointment next week. If Draghi delivers less than is expected, if Powell gives only a quarter, Mike, is that like a catalyst for a sell-off next week from the central banks?
At least from the Fed point of view, I don't think a quarter point in itself is a disappointment if everything else is lining up. Right? If it doesn't seem as if the Fed is ignoring timely worsening data from the U.S., which it doesn't really seem to be the case. So I don't know. I mean, look, we're still in this kind of nervous trading range zone. I think the market has benefited in the last several days just from how negative sentiment had gotten, how cautious people got. They looked at this buying panic in bonds and said, wow, I got to step aside because I don't really know what's going on there. So that's being relaxed. There's a little bit of pressure being let out on the valve there. How far it goes, I don't really know. I'm sure the market's going to ask for more after a quarter point if it gets the quarter point. What if they don't do a quarter? Whether it gets it or not.
Everybody's assuming they're going to do a quarter. I'll tell you what, I still think there's a chance they don't. Now, it's not a huge chance, but I still think it's out there.
Well, you've got some voices saying that, and so it remains in play, I would say.
I think a quarter's pretty secure here. I think the guys who are looking for 50, but I think what Mike was alluding to was the guidance that Powell gives us. Does he repeat mid-cycle adjustment? I'll bet there's a reporter or two who's going to ask him, Mr. Chairman, is this still a mid-cycle adjustment? And kind of goad him into whether or not he wants to use that language again, or is this now the beginning of an easing cycle? And I think the market's very sensitive to that. I just think we've had
Why don't we start goading the politicians to get more busy with fiscal policy instead of driving Jay Powell crazy? He misspeaks. You know what? Anybody with that kind of pressure Like the weight of the world's on this man's shoulders.
Exactly.
And even though Chuck Schumer says the only people that can help us now are the Fed, that is the laziest, craziest comment I have ever heard from somebody in Congress for more decades than I've been following markets.
Santoli, just a really good idea to give Rick the last word. I just want to point that out as a little career
Always works
advice
for
right
me,
there.
yeah.
Okay. Coming up when we return, Democratic presidential candidate Tom Steyer is going to join us live. We're going to ask the billionaire businessman about the Democrats' 2020 playbook and how he plans to run against the Donald Trump economy. Stay tuned. That's next right here on Squawk.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Oh, I found one of our new Vauxhall Griffin editions.
Yes. What comes as standard?
Standard? Well, alloy wheels, sat-nav, aircon, DAB radio, Bluetooth, smartphone projection and USB connection.
Wow. Is that everything?
Sorry, forgot the colour touchscreen.
Buy a new Griffin edition, Adam, Astra, Corsa or Mocha X Plus and get a whole host of features as standard. The Griffin edition range. All Griffin, no bull. Visit your nearest retailer now. Vauxhall, British brand since 1903. Participating retailers only. Limited units while stocks last.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids chooses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Did someone say winter sun? It's that time again, and this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA net or protected, subject to availability and conditions.
Welcome back to Squawk Box, everyone. Let's quickly recap this hour's big breaking economic news. The latest ADP report showing an addition of 195,000 private sector jobs for the month of August. Of course, this comes ahead of tomorrow's big employment report from the Labor Department. Economists are looking for 150,000 jobs to have been added for the month of August, with the unemployment rate holding steady at 3.7%. Been watching the markets this morning, and we've been in the green all morning long, largely because of the idea that trade talks with China will take place next month. At least that's the early word that we're hearing. As a result, you see the Dow futures up by about 269 points, S&P futures up by 28, and the NASDAQ up by 95. Joining us right now is our Squawk Newsmaker of the Morning, one of the candidates seeking the Democratic nomination for president, Tom Steyer, who is the founder of Next Gen America and Farallon Capital Management. And Tom, it's good to see you.
Becky, it's nice to talk to you.
So, Tom, why are you running for president?
Well, I'm running for president because we have a broken government in Washington, D.C. Because this government, there's been a hostile corporate takeover of this government. And if we're going to, in fact, meet any of the needs of the American people, we're going to have to restore our democracy, get back to government of, by, and for the people. And it's urgent. That's why I'm running, Becky. Somebody's got to do the job.
Hey, Tom, I think about some other high-profile business leaders who have looked at running either for the Democratic nomination or as an independent. Howard Schultz, who now says he's taking a detour, at least for his path, and Mayor Bloomberg, who I think looked at it and didn't see a clear path for election. Why do you think, as a business leader, you could make that case and actually get elected?
Well, I think two things, Becky. First of all, for the last 10 years, I've been putting together coalitions of ordinary American citizens to take on unchecked corporate power, and we've been winning. So I have been doing this successfully as an outsider in the political system for 10 years. Second of all, I believe that it's going to be important for whatever Democrat is the nominee to know a lot about the economy, to be able to take on Mr. Trump on the economy. And you have known me for over a decade. I'm somebody who built a business from scratch into a big international business. I've thought a lot about it, and I believe I can expose Mr. Trump as the failure he was as a business person and as the failure he has been as the leading economic policymaker in the United States. So I think actually I'm the person who has the history of doing what's important as an outsider and the person who has the skill set to take on Mr. Trump successfully on the economy.
Hey, Tom, as a billionaire and as a businessman, there is probably a large chunk of your party that thinks that that's going to disqualify you. You're somebody who has taken advantage of the capitalist system, and there are a lot of people in your party who think that capitalism has a big problem. Why do you think that you're going to be able to go up against that, just realizing some of the things that are happening in the Democratic Party right now?
Well, I do think there's a problem with business in the United States, Becky, and that's this. Business has decided it can take over government and has successfully done so. If you take a look at what's happened over the last 40 years, the business community has been able to write the rules for itself on how it's going to operate. You take a look at exactly what's happened in terms of distribution of income around this country, and you can see that for 40 years, the vast bulk of Americans haven't gotten a raise. That's 2 generations. That's never happened before. So there is a problem with business, which is business is not supposed to be the prime controller of the American government. The American people are. And that's something which I think it is urgent for us to redress. And I think that I'm the person to do it because I've successfully been taking them on for 10 years.
Tom, maybe it's a business question, but how do you feel about deficits? How do you feel about balancing the budget? Clearly, the budget and the deficit has continued to increase.
Well, if you take a look at the Republican Trump tax plan that they pushed through, that was a gigantic giveaway to corporations and the richest Americans who own and run those corporations. So when you talk about the deficit, what you're looking at is a starving of the government for revenues and a huge giveaway to the richest Americans. And that's something where, as a result, the Republicans are now saying, oh, we can't afford to invest in Americans. We can't afford to invest in education.
But so many people in
too expensive.
But Tom, so many people in the Democratic Party are now talking about spending even more, whether it's the Green New Deal or all sorts of other priorities, and there doesn't seem to be any attention on balancing a budget.
Listen, it is the idea that Republicans are talking about being deficit hawks is laughable. The truth of the matter is there's been a systematic attempt over 40 years to make sure that rich people in the United States and corporations in the United States can hang on to much more of their income than they had before. And as a result, people are now talking about the deficit which Mr. Trump and the Republicans created. I find that honestly laughable. The truth of the matter is we need a government that can pay for itself. We need a government that understands that investing in the American people is how we're going to succeed. This is an administration that doesn't know anything about economics, that is dangerous for the American people, and is really threatening our prosperity. So I have no problem in saying that there's no question here about who's created this deficit and now who's trying to sit here and act high and mighty. The Republican Party has walked away from fiscal competence and fiscal conservatism.
Tom, the geographic center of the party now, if people like Elizabeth Warren, the senator, or Bernie Sanders and others, I think they'd have a problem with your corporate background. I mean, you're Wall Street, Goldman Sachs, hedge fund, and it was a system that allowed you to make billions of dollars, which is why you're on CNBC right now, really, and running for president. But they're also going to have a problem with some of the investments you made at Farallon. Here's an LA Times piece. Tom Steyer's bets on private prisons and coal mining could spell trouble in 2020. More troublesome for Steyer's public image is the fund's history of investing in fossil fuel projects, including a giant coal mine in Australia, generates vast quantities of carbon emissions. The owners overcame protests by environmentalists and won permission to clear 3,700 acres of forest that served as a koala habitat and mine 12 million tons of coal per year. Steyer's critics have long seen his past personal stake in coal mining as hypocritical. So, I mean, koalas, Tom, you move the koalas out?
Listen, when we were at Farallon, we invested in every part of the economy, including fossil fuels. And over a decade ago, I realized that the consequences of that were a threat to the safety and health of Americans. I divested from all of those. I took the Giving Pledge. And for 10 years, I've been working as an environmentalist to take on the oil and gas companies and to make sure that actually what we're doing in terms of climate change is responsible. I'm the person who would declare climate change a national emergency on day one of my presidency.
I saw your
so what I'm
interview last
asking
night.
Americans to do,
Tommy,
what I'm asking Americans, hang on, what I'm asking Americans to do is to do exactly what I did myself,
But how are
which
you
is
gonna
to understand that we're coming from a fossil fuel environment, a fossil fuel economy, that there are unintended consequences of that that are a threat to us, and that we change and move to a clean economy.
Why would the
I've
Democrats
been doing
wanna-
that for
okay,
a
why would the-
decade,
why would the
and that is
Democrats-
exactly what I've been asking other people to do.
Why would the Democrats want to nominate someone when climate change is so front and center that they have a 7-hour town hall meeting with all the baggage that you have? Why would they nominate you to take that on when they can have someone I mean, even Jay Inslee, he was at least an elected official. He was a governor of Washington. He ran on climate change. He's no longer in the race. But
Because
if
I
they're
am
gonna
the
pick
person
someone-
who has been working on climate change most successfully for over a decade. Because I'm the person who actually has been taking on the oil companies at the ballot box and beating them. I'm the person who's been taking on the utilities at the ballot box and beating them. I'm the person who actually closed a corporate tax loophole for $1 billion and used it up to retrofit schools on an energy basis. So in fact, if you look at the record for the last 10 years, I'm the person who has done this. And my plan is the one that recognizes on day one the timing that's necessary and the need to declare this a state of emergency to protect the health and safety of every American. So if you actually go to the videotape and take a look and see who's been successful, who's been on top of it, and who's been leading, actually it's me.
Okay, so Tom, what do you need to do to actually get into that? I mean, you're in the conversation, but you're not nearly at the top of the polls where you're going to ultimately need to be to make any of this work.
Near 1%.
So the question is, what do you have to do to get there?
Actually, if you take a look at the places where I'm spending my time right now, I'm calling you from New Hampshire, you'll see that in the 4 early primary states, if you look at the polls, I'm between 6 and 7%, and I'm either in 4th or 5th place. I've been in this race for 6 or 7 weeks, not 6 or 7 months. So if you actually look at the places where I'm talking to people and where my message is getting out, I'm actually moving very well and people are very receptive to it. So in fact, if you take a look at the facts, you'll find out that what I have to say and the message that I'm bringing about a corporate takeover of our government, the need for climate emergency, and my experience in economics and my ability to expose Mr. Trump for the fake that he is and the fraud that he is something that Americans are responding to very well.
Tom, are you walking the walk now? How'd you get to New Hampshire? Are you living a fossil fuel-free life right now? How'd you get to New Hampshire? You take a commercial flight, a private flight? How'd you get there?
Of course I took a commercial flight. I don't fly on private planes.
Okay. All right, but you did take a commercial.
So, just so you know, and in fact, I don't know whether you guys have done this, but I've taken a look at my carbon footprint, and I have a carbon footprint which I have a huge experiment in resequestering carbon into the ground at our ranch. So when you ask me about what I'm doing, I've thought it through. I've had more than a decade to figure out how to divest from all this stuff. I've had a decade to figure out how we can do this in a way that will make America richer, will make us grow faster, it will raise wages, it will create 46 million jobs over 10 years, 4.6 million on average per year, and it will make us much healthier. So when we talk about the move away from fossil fuels, this isn't a question about hurting the economy or destroying jobs. This is a question about us being better off, richer, more prosperous as a result of doing the right thing.
Tom, where do you think the economy stands right now?
Look, I think we can all see signs that the economy is weakening as a result of this trade war. I think that Mr. Trump's attempt to use tariffs to bludgeon other countries into doing what we want is a signal failure. I think that what he's doing across the board economically shows that he doesn't understand what really drives American prosperity. This is a guy who's trying to cut American research and development. This is a guy who doesn't believe in educating American citizens. When you want the way that we prosper, our country is driven by the success of American citizens and our ability to innovate and do new things and create good paying jobs. I don't think he understands one part of that. I think he's living in the past, and I think that his trade policy is a failure. I think his tax policy is a signal failure, and I think that what he's trying to do shows more and more that he doesn't understand what's going on in the 21st century.
If you think the economy is in trouble right now, do you think the Fed should act to cut rates more rapidly than they've signaled to this point?
Look, let me say this. Mr. Trump's attempt to take political control of the Fed is something which has, for the last century, been something American presidents have avoided. The independence of the Fed is a critical part of our success. So regardless of what the Fed does, the big point here is that Mr. Trump is trying to every single lever he can think of to bail himself out between now and November 2020 to try and to stay in power. And that's something which he realistically, it's wrong for him to be doing. I'm not surprised he's doing it. But in the long run, what we need to do is get back to the kind of prosperity that Americans have always looked for, which means broad-based prosperity, where we're investing in the American people and we're doing the things that really create growth and jobs and shared income across society.
Tom, I want to thank you for your time. Tom Steyer, again, is one of the candidates seeking the Democratic nomination for president. Thank you.
Becky, nice to talk to you.
Down at the New York Stock Exchange, Jim Cramer joins us now. I haven't talked to you in, I don't know, it's really true. It's not out of sight, out of mind. It's not out of sight, out of mind. It's absence makes the heart grow fonder, I think, Jim.
Very kind.
We don't need to know where you are. Where are you now in terms of what's happening in investing land?
Well, let's see, remember, a week ago when I left, the mainstream media was saying that Trump lied about phone calls with China. So now, a week later, we know that we trust Mnuchin over Trump or whatever. To me, the market's up 300 Dow points since I left. And a lot of that is on a belief that the semiconductor cycle is back and that technology spending is back. And that's a cyclical business that we thought was just totally hung on China. And then the other thing that's going right is that the retailers are doing well because they're telling their suppliers to eat any tariffs. So these are things that I think very few people expected, which is one of the reasons why the market has a great tone.
We strong again today. That puts us not too far from highs. I just don't know how this finally plays itself out, Jim. And that will the meeting with China will put us past that October. We were worried about the anniversary of the this nationalistic sort of fervor that we're going to see on October 1st. Do you think that both sides now are in a position where they're both willing to give a little bit to come to an arrangement, or are they both more set in their ways, you think?
Well, I think that the President Trump, is set in his ways because he doesn't see any weakening. I mean, look at the jobless report today. Someone earlier said that manufacturing is in recession. Well, manufacturing's been in recession in this country for ages. What I'm surprised at is how strong the consumer is. I think that the Chinese still need it more than we do. I know when I say that, everyone just says, well, wait a second, that's a nice bias that you're showing. It's statistical. I just think that our economy is very strong.
I can tell you that is something that President Trump feels like he feels like China is in. They want to make a deal because they're hurting more than we're hurting. I think that's a fact.
If we got the Fed to lower rates to where the bond market says it should be, then I think that I really wouldn't worry about a recession. I think the only people really talking about a recession is us. And I'm not going to do that.
All right, Jim, thank you. We will see you in a few minutes. And we got to go. We'll be right back.
Flight number 417 has been delayed.
You should be mad at airports.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Make sure you're uni ready with our huge range of practical essentials and home from home comforts and get 10% off for a limited time. T's and C's and exclusions apply. Dunelm, the home of homes.
Millions of people are missing out by having a current account that doesn't pay them any interest on their hard-earned money. TSB offers interest to all their Plus account customers for no monthly fee. Plus, you can stop your friends and family missing out by recommending the Plus account to them. And when they switch, you'll both earn £75. Search online or visit your local branch. Terms and conditions apply.
And a quick final check on the markets, about a half hour before the market opens right now. 288 points higher. Looks to open NASDAQ up about 92 points, and the S&P 500 looking to open about 29 points higher. We got a big show tomorrow. Make sure you join us then. In the meantime, Squawk on the Street begins right now.
Good morning, and welcome to Squawk on the Street. I'm David Faber, along with, his name's Jim Cramer. He's been away for like months.
5 business days.
Months.
5 business days.
But we are together. We're live from the New York Stock Exchange. Unfortunately, we're still missing one more, but he'll be back soon. Carl is on assignment. He is actually on assignment. Taking a look at futures this morning as we get you set up, of course, for the day ahead. Start trading 30 minutes from now. You can see we are set up for a higher open, and that does take us right to our roadmap, of course, because the market is up because, well, trade talks at least are back. The U.S. and China agreeing to meet next month, and stocks, as you saw, reacting positively to that. We're going to talk a bit about Goldman shrinking the partner ranks. Interesting story. Up to a dozen executives reportedly negotiating the exit. Is it a sign of a broader shift for this Wall Street bank? And shares of Palo Alto, they are up. As you can see, CEO Nikesh Arora joins us exclusively in a few minutes. They're up ahead of the bell, of course. This morning we'll be talking with Nikesh. Let's start, though, with the markets this morning. Chance for Jim and I to sort of get back on the same page as to where things stand right now. We also got some fairly positive ADP numbers, 195,000 private sector jobs added in August. That was above the estimate. Jim, the consumer continues to be quite strong in this economy. Yeah. I heard you talking to Joe about, we're the only ones who talk recession. And we got a 10-year above 1.5 again.
I thought that when I saw it's like the bonds also rise. I mean, I think that what we've seen is this endless yield going down versus, say, where the 1 year is, has just spoken so loudly to people that unless the Fed cuts dramatically, the downbeat drumbeat of recession will continue. I continue to look at employment. I keep waiting for some sign of weekly claims being not good.
Right.
I keep waiting for some number which indicates to me that retail sales are bad. I don't get it. And so I tend to think that we do. I was stopped on the street by a construction guy. Right here.
Really?
Yeah.
Okay.
I'd like to talk to the construction
Yeah, of course.
guys. This
Why
is a
not?
giant project's going to last like 17 years.
There's a
here.
lot of them.
We'll all be dead by the time they finish the Bankers Trust building, right?
Yes.
The guy grabs me. He goes, hey, what is this with the recession? And I said, don't look at me. He goes, I am looking at you. You talking recession. I said, no, you got the wrong guy. I mean, he goes, the media. And I'm thinking, how sophisticated is a guy, hard hat guy, saying, hey, listen, the media is talking us in a recession while he's building one of the largest projects. And I do feel that's metaphorical, of course, anecdotal, but metaphorical. The more we talk about it, the more people may believe it, but it's still not showing up when you look at Walmart and Costco.
No, it's not. It's not. Now, it is showing up when you look at investment to a certain extent, or the lack of business investment, slower business investment.
Yes.
Not pointing to a recession. And really, to be fair,
what?
The vast majority of people we speak to during the course of the day are not calling for a recession. They are not.
Well, yeah,
they're calling for the same rate of growth, roughly 2% GDP growth. Happy with that. I mean, the bottom line in terms of these numbers, the ADP numbers, 3-month private sector average monthly job gains of 148, 6-month average 150. Now, 12 months 184. Last year we were doing 219,000. So it's down, but it's still strong.
But you have to watch. You have to watch Walmart, Amazon, Target, Costco, Home Depot. They are the new retailers. And I think that we spend a lot of time looking at the mall and looking at who's in the mall and recognizing, hey, wait a second, there's weakness. And then I see watch and I say to myself, not only is there not weakness, but there's a consolidation. And when you hear Target just jamming the suppliers, then you realize, you know what, you got to be careful saying that the consumer is going to have to spend $800 more, which is old figures from the Fed. The Fed is talked about too much, too.
This is very interesting.
What
I mean, Target basically telling you, just reference it, it's suppliers, you deal with it.
Brian,
we're not going to raise prices. By the way, come on. What are they supposed to do? If you're one of these suppliers, mid to small size business, how are you supposed to swallow that?
You're going to have a bad year.
Yeah, you're going to have a bad year.
Yeah, you will. Now, some of them have credit problems, and they will have to reconfigure. If you read Dollar Tree's unbelievable conference call last week, Gary Philbin saving $100 million by just trying to figure out.
I did, actually.
By moving.
Strangely enough, I did read that because I think you were gone, so I chose to read it.
I mean, how about the fact that the containers are not being used effectively?
Right.
The switching away continually.
But we're still talking about $270 billion worth of goods coming from China that will be tariffed. Well, some already are. The rest will be December 15th. We've got the additional October 1st tariffs, which, by the way, will go into effect. The other 5%, taking it from 25 to 30% on what is already under tariff, which will take effect prior to any meetings that take place between the U.S. and China.
Look, I've been kind of right on the president's plan on tariffs, so I'm going to double down here. I think that his goal is to have all the tariffs be, say, 25, so he can take them down if he wants to ahead of the election.
Right.
Particularly because, remember, he looks at the stock market.
Yep.
The Fed should be looking at the bond market, which is telling you your rates are too high. The president looks at the stock market because the president has always viewed that as the best gauge. Now, here we are. The Dow's up 330 points since I left. And what really happened? Well, we found out that two phone calls that most of the media, the red Vanity Fair, believes were lies with China. Now I come back and it's like Mnuchin, who's the most trusted guy in the media because the media loves the guy, saying, hey, listen, things are good. Lighthizer being involved does matter. He's a technician, but does matter. But I continue to see, David, the two things I see are companies starting to take advantage of the low rates. $28 billion.
Yeah.
Did
you see that? Did you see Disney get that, 275 on 2.75 on a 30-year?
Do you remember how much John Deere was in trouble in 2008, 2009, their finance arm? Now John Deere, in the midst of what's supposed to be a trade war that's destroying the farmers, well, guess what? They borrow at incredibly low prices. David, there's an article in USA Today.
It's quite helpful.
Right, about ATT and how they have the best wireless. David, if ATT can refinance, do you think we're going to be sitting here worried about ATT?
Yes, I do.
You do?
I do. I still believe we will be worried about AT&T over the next couple of years, and where the over-under is and how long it's going to be until there's concern about the dividend. Now, they will absolutely disagree with that, but I'm just reflecting a lot of conversation that I have endlessly with investors who own the stock, others who choose not to do so, but look at it. And there are certainly plenty of people who would take issue with the fact that their network is superior to Verizon's in terms of the way Verizon optimizes for wireless.
Then how about
and
GE?
the fact that a lot of their, obviously, EBITDA comes from DirecTV
feel better
and
about
Warner.
GE with the low rates?
Yes, you can feel better about everything with the low rates in terms of the ability of these companies to refinance and lower their interest payments, which is only a good thing.
Right. And the fact is there's $28 billion in IPOs last quarter and $28 billion in debt in one day.
I know. By the way, speaking of IPOs...
What's that?
Have you seen there's some headlines on the WeWork IPO. I know you've had some thoughts about this. They did, amazingly enough. But I did want to share some insight as well, because certainly it's a name that we've been waiting for to potentially hit the market. They're starting to, on the roadshow, they're starting to obviously sell. They're not coming next week at WeWork. We can't expect that to be the case, Jim. But the valuation targets are continuing to decline in terms of at least what I'm hearing from those who... Oh, I didn't bring my pad with me. I got my notes, But what I'm hearing is the demand is not there at this point at even $25 billion. A valuation of $25
boy. There was a $40 billion
Now, there was a Bloomberg headline that ran a little bit that said 20 to 30. What I'm hearing is even at 25 right now, there is not going to be a great deal of demand. And it's going to be interesting to see where WeWork comes in. Yesterday, Sam Zell was on our air, of course, the noted real estate investor. Well, let me just share what he said. You can hear it yourself, of course, in terms of that business. He didn't have any real positive things to say. Do we have that?
I've had the privilege of investing in this kind of company once before. As a matter of fact, this company, or this kind of company, began in 1956 with a guy named Fijian, who rented a floor and then subdivided it. Every single company in this space has gone broke.
I don't know who Fijian is, by the way. We got to find Fijian. That was 56, so he may no longer be with us. But Zell yesterday, Roth, of course, related, and Sternlicht were all at an ISI conference and all saying similarly negative things. Now, all right, they're real estate guys. They have an axe to grind maybe in some way, but there are certainly questions about the business model. Thank you. My pads. I appreciate that. Good. We'll see where things end up, Jim. But
I so don't want to be in that deal. I said that before I left, so that's not revelatory.
No, you were quite negative, in fact,
I just said,
after
listen,
the
this
S1
is just
first hit.
Right. I took some
They are growing very quickly.
Like I could care less.
Unless
my mother calls me. I don't know.
As the valuation number declines here, and as we see what their choices are in terms of where the We company would choose to actually go public, I think we should also remember SoftBank. Such a significant investor here at higher numbers. Post-money valuation at the time, I believe they took in $6 billion from SoftBank, $5 billion in the form of primary growth capital, another $1 billion. This was back earlier this year in secondary capital. And that was around $47 billion valuation. So you have SoftBank going out to try to do Vision Fund 2. You have Uber now trading below the prices that SoftBank invested in. Either time. Remember, of course, they were about $6.6 billion into Uber at various prices. And the prospect of WeWork coming public at a valuation below $25 billion, that's got to give some pause to SoftBank in terms of their ability to go out with Vision Fund 2.
How desperate are they? They have to do this. I mean, look, if it's a real winner, let's wait a little. Although, of course, this, like Slack, work and WeWork. If it has work in the title, I'm a seller.
We'll get to Slack, of course, around the bell. It's going to be down. Although, I mean, the growth rate is still very, very strong.
Slack, the rate's good.
Yeah.
Microsoft.
When we come back, though, speaking of earnings, Palo Alto Networks out with those results.
Up
they were ahead of
from where it was at 4:35.
And you can see the stock looks up to as much as 10% before we get going here at the New York Stock Exchange. We're going to speak with the company's CEO, Nikesh Arora. And by the way, to give you one more look at futures, of course, as we do get ready for that open, you can see we are going to be higher on the prospect of new trade talks with China sometime in October.
And because I'm back.
And because Jim is finally.
Thank you. No arrogance there.
Finally. Gone for 5 months.
At Romans, you can rent your next home from just £36, plus your first month's rent. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
This meeting of the Losers Club has officially begun.
Tomorrow, I dreamt of you. It all ends. I craved you. In London. I missed you. Don't miss the final chapter.
We didn't stop it. We can't let it happen again.
Don't miss the end of It.
Hello?
It, Chapter 2. It's cinemas tomorrow. Book tickets from your desktop. Rated 15.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our Mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did you know there's an ethical bank that takes care of your money and the world around you? Your money is powerful. The impact it has on where you choose to bank has never been more important. We're Triodos Bank. We're completely open about how we use your money, so you can see for yourself the positive impact it has for people and the planet. Join a community of like-minded people, making the world a better place. Follow your heart. Use your head. Join Triodos Bank.
Dave, it's not always the case that we have stock up 19, 20 points and have the CEO who's behind it. Yes, that's right. We've got a company's stock is up more than 9% ahead of the bell, and it is Palo Alto Networks, symbol PANW. Joining us now at Post 9, it's Palo Alto's chairman and CEO, old friend, Vikesh Arora. Vikesh, first of all, congratulations. You traced out a vision yesterday, which is that not only are you going to be number one in what we can call firewall, which was somewhat older but still relevant, but cloud. How do you intend to be number one?
Well, Jim, I think we're in a once-in-a-lifetime generational shift in computing. Every company, every CIO you talk to is saying, we're going to the cloud. Either they're going to the cloud, they're talking about going to the cloud, they're working with Amazon, Google, Alibaba, Oracle, or Microsoft, moving their workloads to the cloud. Now, if you think about cybersecurity, there is no single large cybersecurity player who's actually focused on providing cloud security. You cannot make this generational computing shift happen without securing the applications going to the cloud. So we took an early point of view about 12 months ago. We acquired companies, we integrated them, we went to customers, demonstrated where the need for security is, and we're doing well so far. Fingers crossed.
All right, now, your company had been known for having a little bit slower growth than some of the bigger, also upstart players in, let's say, both cloud and cyber. You traced out a vision last night, which would indicate that you can accelerate billings versus a lot of the favorites, including Kramer fave Okta, which, I talk about constantly.
I know you love the upstarts, Jim. It's very easy to drive revenue growth without profitability. I would love to have that kind of a business. Unfortunately, my investors want cash flow and growth. So we're going to go generate $1 billion plus of free cash flow the next 3 years, every year. On top of that, we're going to go what we call our next generation security billings and revenue, approximately 57%, which in next year would make us bigger than any of the upstarts you like, whether it's Okta, CrowdStrike, Zscaler. And FY22, it probably makes us about 80% bigger than your favorite company.
Well, just so you know, I like Okta, Zscaler, but my travel trust owns Palo Alto. So before we just say, hey, listen, I like them more. 3-year growth last night traced out well in advance, well higher than some of the analyst models, of which you also indicated you follow.
Well, I've been studying the industry, the company, the market for the last 1 year, and I've read about 25 analyst reports over the last 3 months and went through every model. Very early in my life, I was an analyst, so I understand how these models work. You have to make sure you understand the growth rate, profitability, and long-term, cost of capital. So I looked at every one of them and saying, what's going to make them change their models and point of view about power-up networks? In the end, I can give them all the song and dance about vision and strategy. They're going to go and try and put a number in their models to figure out what my stock's worth.
Okay. The thing that really struck me was that there were a lot of people, Nikesh, who said, your deal might... All you're going to do is buy companies, buy companies, buy companies. There were some transitions, managers lost. To me, what you straightened out last night was that the acquisitions are to be so that you have the ultimate, and also that